Hello everyone, welcome to the channel again. My name is André Cardoso. As always, thank you for being here. It's a pleasure to share my views and my insights with you. And I'm here today to share my second video of this journey. Started last week, obviously. This is kind of a weekly video where I will cover some of the pairs and some of the assets that I follow during this week, and trying to project some patterns ahead, their own formation. So let's start with the cable, and actually let me just check exactly. Let's start with the cable. This is a 2 hours time frame chart. I shared this chart already multiple times before. And we are actually at this point, it makes no sense to get involved at this point. So this is a 2 hours time frame chart. There's a very sharp pattern completed at 122.40. So this is a pattern based or let's say supported in this case by this false breakout of the previous low. So every time you identify a false breakout of the previous structural lows or previous structure highs, that will depend obviously, but every time every time you can identify a false breakout, you should search for the price should search for the golden Fibonacci once confirmed. As I said before on my previous video, you always only confirm the false breakout below if the price breaks above the previous resistance, so you need to see a breakout above the highs, the previous structure highs, in order to confirm this is actually a potential false breakout below. And if that happens, you will point to the golden Fibonacci level. So we can see if you decrease your time frame, you can see there was a very fast reaction for the cable once the price touches that Fibonacci extension level. As you can see that yesterday, last session, the price has nailed the Fibonacci extension and gives sequence to this very sharp and aggressive movement, not to the default target zone, the 50% Fibonacci retracement level. So we do expect at least the 50% Fibonacci retracement to act as a potential support level, so which means at some point this Fibonacci may act as an element of support. And this sequence, as I shared before in my previous video also, all this sequence will complete a bullish 5-0 sequence. So if somehow or for some reason you are trying to short, be careful, or if you are holding your shorts, be careful, because this Fibonacci level may act as an element of support. So for that to happen, obviously we need to see a deeper retracement or a deeper pullback for the cable at this point, intraday, let's say. So that being said, I will not be surprised to well, I will not. I never get surprises. So basically, I trade the pattern, or I avoid it. So if you are holding your shorts, be careful with this low. So this is a default target zone. But if you are searching for opportunities to go short the cable, I will prefer a retest of the highs, very similar to the previous projection or the previous pattern, or let's say the reaction that I was expecting before for crude oil. And let's jump very fast there. The same thing that I was expecting before. If I need to search for an opportunity to go long on crude, I prefer to wait for a deeper pullback based on the shape, based on the Fibonacci ratios. I will expect the shark pattern to complete below, which never happened, by the way. So the same way, I prefer to wait. The same strategy, let's say, I will apply for the cable. I prefer to wait for the 224% Fibonacci extension, which is possible to achieve at this point. So there's nothing there's nothing to avoid that to happen, so that's still possible. Of course, unless the market starts to break the recent lows. If the market breaks these lows, I will start to ignore that possibility. But based on the ratios, it's still possible to form the bearish shark pattern at 224% Fibonacci extension. And as I said, for crude oil, this one may offer me a better and friendly risk reward if I want to try to go short. So I prefer to wait for this one. But as I start to say, so we are now facing a bearish shark pattern completed at the golden Fibonacci extension level, which gives sequence to a very fast and aggressive movement to the downside. So, and basically, if the price fails the 50% Fibonacci, almost for sure it's trading the previous level. So we saw the cable finding support at the 38% Fibonacci level, acting as a support. Back to the golden Fibonacci, back to the golden extension level. So at this point, I will not put my money at risk in this environment. It's a Friday. I don't think it makes sense to try to force this trade to the downside. I prefer to wait for a retest of the weekly fractal, which may offer me, as I said, a better and friendly risk-reward approach. And it will, and if the price, actually, if the pattern starts to work, it will offer me an opportunity to manage the trade in much better conditions than trying to short the markets here. If you extend the previous trend line support, so this is a trend line, well, we can consider this the previous ascending momentum guideline. So this is not a real trend line because it was not reinforced multiple times. We can see the starting point, then you can point to previous lows, and that's kind of a retest of this trend line. As you can see here, the price breaking below and then starting to retest this trend line again. So basically, I will not be surprised to see the formation of the shark pattern and eventually an approach to the previous highs and weekly fractal resistance in order to find some pressure there. But as I said, I prefer to wait for this pattern, which may offer me a much better risk-reward opportunity. Those who are, let's go to the Aussie versus the New Zealand. Those who are trading, well, my subscribers are holding a position for the Australian dollar versus the New Zealand to the upside. We saw the breakout of this descending channel, and we took a trade to the upside. So we are already, this is the 38% Fibonacci retracement. It was my first target zone. So at this point, we have a break-even position. Stops secured at break-even, no risk involved anymore. We start to partitioning these positions, so which means we start to close a portion of this initial position size. So we are just holding the potential movement to the upside. If that happens, we will start to maximize our profits. So we have some Fibonacci levels above as guidelines: 109.81, 111, 112. 72 and also 113.74. So basically it's a Fibonacci retracement between the monthly fractal resistance and the previous structure support and weekly fractal. Now let's go to the dollar versus the Canadian. So we saw a very interesting reaction here. So let's not ignore this descending channel. Let me try to put some color here. Note that we're still threatening these midpoints. So this is what we call the potential regression trend line or a regression trend. So this is the midpoint of the descending channel, which, as you can see, multiple times acting as kind of a pivot zone between support and resistance. So we're still threatening the violation of this regression trend level for this descending channel, and also a potential trend line support. So this is a trend line support based on these recent lows right here. I'm using the magnet, so we have these lows right there projected to these recent lows. So basically covering these three lows, we have this line here. So this is not a trend line, but it may start to form structure, which means it may start to form this kind of a triangle where the price will trade inside this range. Well, and that's what we have for the dollar versus the Canadian. I see potential support for dollar CAD above the previous structure highs. After a breakout of this support, as mentioned before, we were expecting a fall below these lows or below this fractal and the daily fractal support. So we were expecting that move. And we are now facing these as I said, the regression trend midpoint of this descending channel. So I admit the possibility for some pressure here. Note that we are also, and this is important because it may be a definition of the next moves ahead. So basically we are also facing a potential false breakout below the previous lows, and as I said before, a violation of the previous highs, the previous resistance, will confirm this false breakout. And if that happens, we will start to search for an extension, as I said multiple times, to the golden Fibonacci extension level. So based on this simple projection, we can see the 200 moving average pointing to 135.48. We have also that Fibonacci extension projected near that zone. So basically we may see later the formation of a shark pattern, which may offer you a 50% Fibonacci retracement completing the bullish 5-0 sequence, which may offer you a bounce again. Pure speculation, nothing of this makes sense unless the shark pattern completes above. For now, pay attention to the potential false breakout and the breakout above the resistance, which may confirm the false breakout, as I said. Of course, a violation of the weekly fractal, and we have this channel support to be reinforced. Let's say if the price decides to trade, if the price decides to break the weekly fractal, we may see more downside momentum for the dollar versus the Canadian. Now, upside momentum, if the price starts to bounce from this price zone, that guides us this will guide us to crude oil. As I said last Friday, I was expecting a deeper pullback. As I said, it will offer me a better and much friendly risk-reward approach to try the longs for crude oil. Never happened. The price finds support at the 78.6% Fibonacci retracement and starts to react. At this point, we have a minor pattern that may start to emerge, and some of you may already start to project this pattern. So this is the default. This is a default W or M shape if inverted, of course. But this is the W shape bearish bat pattern, not the 78.6, but the 88.6% Fibonacci retracement level. So this is a bearish bat pattern. So we're still trading inside these kind of it may act as a flag pattern, a bearish structure. It may take some time to develop and to form and to complete, but time will say. But of course, a violation above the channel will invalidate that potential flag channel or a flag pattern, which may break in the direction of the previous trend or in the direction of the previous moves. So basically, a bearish flag pattern or a major flag pattern. We can see this on a higher time frame. You can go into a kind of a daily time frame if you wish, and if the price starts to form, you know, a bearish flag pattern there, it may trigger more downside later, but only time will say. But for now we are focused on a lower scale or a lower time frame events, and we are actually, as you can see, those red candles overbought momentum, oversold momentum. So if you push your RSI, and the reason why I use those, this is an indicator, this is my own, well, I don't use it as an indicator, but it's just, it provides me information when the market closes oversold and overbought. Okay, every time you see oversold conditions, every time the price closes in an oversold condition, it will print me a green candle. Every time the price closes in the overbought condition, it will print me a red candle. That gives me a simple information. The price starts to enter in exhaustion. So basically, it enters on my extreme RSI oversold and overbought levels, which means when I trade harmonic patterns, I want to see the price completing those patterns within these conditions. So I need to see another red. Okay, I need to see another red conjunction of candles printed when approaching the 88.6, and this will give you something like the first, the second, and the third high. It may act as a third drive formation, but I want to see a third high, which will help the formation of the pattern. Obviously, I don't want to try nothing before the completion of a specific pattern. I don't try to trade the emotionally, you know. It may sound a good place to go short. Yes, it may, but it's much better if you trade the pattern completion point, or from the pattern completion point. It may offer you much better risk-reward approach. So that being said, 80.63, so this is the 88.6% Fibonacci retracement of all this swing low, which may complete a minor. We are trading in a 2 hours time frame, a 1 hour time frame. You can try to plot that pattern at 80.53. The formation of that pattern will suggest, and I say suggest because nothing is granted, even the most perfect pattern will fail you at some point, but the completion of the pattern will suggest a pullback to the 38% fib, which also suggests a visit to the 200 moving average on this specific time frame, the 2 hours time frame. If the pattern completes, I will not be surprised to see at some point the 200 moving average and the price converging at these Fibonacci levels. As some of you also know, this pattern can extend to the 113% Fibonacci extension. For that reason, as I always like to say, if you want to try to short the bearish bat pattern, always try to protect your position with your stops above the 113% Fibonacci extension. For that, you need to measure. You need the tools, you need to push the tools and measure your target expectation, because as I said multiple times, we never enter the market to lose more than what we expect to win, which forces you to use, in this case, a maximum of 3.77% of risk in this trade. Okay, adjust your position size. This will, imagine a situation where I will put 1% of my capital at risk in this trade, which means 3.77% of risk. It's equivalent to a 1% of my equity as a loss. So this is a maximum one-to-one risk-reward approach that we are allowed to use to trade. We don't use a situation like this. It makes no sense. If you repeat this process over and over again, this is your risk, this is your reward, or your potential reward. And one thing that we know, this is only a potential reward. This is not granted, as I said multiple times. This is granted. If the market starts to fail, this is granted. You will lose 6%. That makes no sense. So, assuming a simple rule where we say I never enter the market to lose more than I expect to win, I'm forced to use a one-to-one risk-reward approach in this case because I need to protect my stops above the 113% Fibonacci extension. If I put my stops below, we may see the price threatening the violation of the resistance, hunting all those stops positioned right above, and it happens to me a lot of times because sometimes I short the 88.6 and I put my stops and I see the price penetrating the 113% Fibonacci extension and then starting to pull back again. But that happens and makes part of the game. You need to protect. At some point you need to say, okay, I'm out, even suffering the consequences of seeing the market coming in your direction again as you expected earlier, but you need to pay for that consequence. So you need to pay to get out as sooner as the price invalidates the sequence, the pattern. Because if the price penetrates the 113% Fibonacci extension and starts to trade higher, I cannot target the 38% Fibonacci extension retracement level. This is not a default target, you know, this is not an edge. This is not something that I can predict based on previous and historical data and say, okay, if the price trades higher or above the 113, that may offer me, even though the retracement to the 38% Fibonacci. No. The only thing that will offer me that edge is a short from the 88.6 or eventually an extension to the 113, and then the price starts to fall immediately. If the price starts to trade higher, that will invalidate both the patterns, and you need to jump out of this trade immediately because there's a higher probability for an extension to the golden Fibonacci extension, and that will also complete, of course, some of you already know, the bearish crab pattern extended at the golden Fib, and that may also suggest a retracement to the 38% Fib. So, as you can see, and this is, of course, at this point, this is pure speculation, but as you can see, the formation of that crab pattern targets the 38% Fibonacci, and that Fibonacci retracement level will force a retest of this previous structure high. So based on the Fibonacci ratios that we have at this point, and based on the possible variables that we have, we will not be surprised to see one of two, the formation of one of these two patterns inside this channel, and I prefer to wait for the breakout above the resistance. And at this point, if that happens, I will wait for the 113% Fibonacci extension level. I will try my short from there. I will target the 38% Fibonacci retracement. I will target a move towards 4.75%. Okay, almost 4,000 points below my entry, and this gives me my hedge. So based on my potential reward, I know that I cannot lose more than what I expect to win. So I can use, as an example, of course, 4.75, that will put the price of the golden Fibonacci almost for sure. For 4.75, it's right there. So this is a one-to-one risk-reward approach, as I said before. And question, does it make sense to use a situation like this, trading the alt bat pattern at the 113? Answer, no. The reason why is because you will put your stops immediately below the crab pattern completion point. So based on these variables are not so friendly. So of course, if you trade the alt bat pattern, you need to try to minimize your risk. So in what I do is a 1-2 risk reward approach, which means I will put my stops at, let's say, 2.4, 2.5 maximum, far enough. I have a risk reward. Actually, let me push this tool short. So if you short the price there, you have your potential reward and you have your stops, kind of a 1.99 risk reward ratio, as you can see. So this is kind of a $1 at risk for each $2 in profit. So, and this, it's fair enough to use a situation like this, and this is the type of a situation that I usually suggest to trade the alt bat pattern, not the same as the bearish bat pattern. As I said before, the bat pattern always suggests to use a 1-to-1 risk reward. If you trade above the extension, so we use a 1-2 risk reward approach, the same strategy will be applied above at the golden Fibonacci extension. If for some reason you prefer to short the crab pattern at the golden Fib, you will put your target, you adjust your targets. You will target the 38% Fib, so which means you have a potential reward of 5.6%. Why? Of course, 6.4%, okay, potential reward, and you can play with this 5 point and use a 3.3, 3.2, okay, 1-2 risk reward approach, and try to play it like this. So this is always my suggestion. So of course, again, this is pure speculation. I'm not sure if the price will complete this pattern. The ratios and the Fibonacci variables presented below may suggest some of these patterns. And as I said, so at this point, if you want to short crude oil, I wait for the 113% Fibonacci extension. 1-2 risk reward approach, try to target the 38% Fibonacci level, 78.82. So this is the default target for the bearish alt bat pattern, which implies crude oil to remain inside this channel or these consolidations moving sideways. These kind of, as I said before, potential higher degree flag pattern or bearish flag pattern. So pay attention to the golden Fibonacci 82.72 for crude oil. Let's move forward. Now, Australian dollar already covered. Let's go to the Norwegian krone. On last Friday, I shared this potential shark pattern projected at the golden Fibonacci level. So we were trading right there at this high. So basically, we were live forming this daily fractal resistance at 10:30, and I was saying I will not ignore the potential for the downside from this price. And of course, if you were searching for a specific price to enter, I projected the pattern at 10.32, so $2 above the fractal, and then the price, but the price starts to fall a few points below, and you need to pay attention to these moves because there's also a possibility for the price to actually to find support or resistance immediately or a few points below or above those completion points. You need to pay attention to these moments. At this point, we are also threatening daily fractal support. Also, actually, we are not there yet, and we saw we saw a recent this recent bounce from this session today, but I still believe there's room for the downside for the Norwegian krone. I will pay attention to the formation of the bullish butterfly pattern now at this point, based on the ratios the market offered. I will pay attention to the potential formation of a bullish butterfly pattern at 9.58. So this is the 127% Fibonacci extension between the previous lows and previous highs. So an extension projected below. Based on the ratios that we have, I will not be surprised to see the formation of this pattern. As we can see, that will put the price again very close, or at least approaching these regression trends inside this descending channel, which is the midpoint of this channel again. So another 2 cents that I can offer you. Every time we see a specific channel, and this is not so clear because we have these previous structural lows at the start, when the channel starts to form, then we saw a breakout of this channel and then the price recovering to the midpoint again. So we can see this channel in different dimensions, let's say. And we saw a breakout below the channel and then a breakout above the channel. So nothing assures me the price will not trade again below this channel. And if that happens, I will also pay attention to the golden Fibonacci extension just a few points below. Actually, we need to create, we have a range here to pay attention to, but I need a specific reaction on those Fibonacci levels. I don't expect to see the butterfly pattern being pushed much lower to complete. Okay, I need to see the butterfly pattern. Usually it will respect the levels. Okay, so I need to see a very fast and significant reaction after the completion point. If the price starts to pull back or to be pushed lower, that pattern will invalidate almost immediately. Okay, so I need to see the butterfly pattern reacting at the golden fib maximum of the maximum, the 141. So maximum, and the reason why I say maximum is because if you put your stops below this 141% Fibonacci extension, well, nothing assures me the price will not be pushed to the golden Fibonacci level and complete the shark pattern instead of the butterfly, because the ratios may be used on both the patterns. So first of all, pay attention to 9.58 and expect a fast and immediate reaction after the completion of the butterfly pattern. But if the price starts to fail, jump out of this trade and pay attention to the potential move to the downside, to the golden Fibonacci extension, which, by the way, let me extend this to the right, by the way, may converge with a retest of this kind of a descending channel, well, with these broken attempts, multiple attempts to break to the downside, and followed by, or preceded in this case, preceded also by this attempt to break above the structure. So that's it. Wait for the bullish butterfly pattern and then the eventual crab pattern, which may converge with this trend line support for the Norwegian krone. For the upside, I need to see a clear violation of the resistance. We have a resistance at 1002. So basically, if I see a reaction above this resistance, it may start to provide some hints and some signals to form different patterns. Mexican peso. I tried one again. This was one of my attempts to go long with the Mexican peso. I wasn't expecting a violation of this or not expecting the violation, not the correct sentence. I was expecting a bounce after the formation, after seeing the price finding some pressure at the 88.6. I was expecting at least a bounce to the 200 moving average, approaching from above, and I was expecting a move to the 38% Fibonacci extension back to the previous resistance. Never happened, and the price invalidates both the bearish BAT and the bearish alt BAT pattern. Okay, so basically we saw the price invalidating these sequences. I will not be surprised to see more downside for the Mexican peso. My next level, and because we are now trading below the monthly fractal, my next level of pressure for the Mexican peso, I projected this chart on Twitter. I shared this chart on Twitter yesterday, I believe. So 1849, let's say 1850. So this is the bullish crab pattern completion point for the Mexican peso. So, and that's the level that I'm waiting for this pair in order to start to think in the possibility for a bounce. Of course, movements below the monthly fractal support, while below this monthly fractal, I will suggest more downside for the Mexican peso, and any attempt to recover, or let's say if the price recovers above the fractal, that also will increase with the probability to remain above the fractal support, which will invalidate the formation of the pattern. Of course, if the price starts to bounce from this price zone, recovering the fractal, and if it remains above, for a specific period of time, we may not see the formation of this crab pattern, of course. Dollar versus yen. Another crab pattern projected at 126.25. We have nice reactions for this pair. I shared this one last week, and I saw the potential next zone for the dollar versus the yen last week. We saw the previous structure support acting again as resistance. I saw this as a next zone for a potential heads and shoulders formation at that point. So I was expecting this as a potential right shoulder to be formed right there. Then the price starts to approach these previous lows and breaks below the fractal. That means we may see more downside for dollar versus yen, and I'm pointing to the crab pattern projected at 126.25, golden Fibonacci extension of this last swing high. This is a minor or a lower degree event, and of course after the formation of the pattern, very similar to the one printed above, this shark pattern printed at 224, which offers a nice bounce. Nothing more will be expected. I will not expect a move, a madness. I'm very prudent with my targets. Target your fib level, start to partitioning your trade, break even your trade as soon as possible, secure your equity. It's very important. So that being said, bullish crab pattern for the dollar versus the yen. Euro versus the yen, I was expecting, I believe I shared this one before, I was expecting the formation of this bearish alt BAT pattern at 113% Fibonacci extension level. As you can see, the price finds, I don't have here the 88.6, let me change this. As we can see, the price finds resistance below the starting point of this pattern, which means it keeps valid the BAT pattern at the 88.6. So this was part of the risk process. Never completed the bearish alt BAT pattern as I was expecting. And that being said, we are already approaching the 78.6. Actually, we are trading between the 61 and the 78.6% Fibonacci retracement. At this point, I have no clear pattern emerging. All the yen pairs are suggesting more downside momentum, even though some of them some of them still providing some kind of I'm not saying signals, but some of them may suggest the formation of a different pattern, which is the inverted head and shoulders formation that we can see here on euro versus the yen. We have the left shoulder, the head, the price. If the price starts to bounce from these levels, of course, this is not a trade setup. This is not a setup to try to go long. You need to wait for the violation of the daily fractal in order to consider these head and shoulders formation, because nothing assures me the price will not trade even lower, breaking the daily fractal and trading below. So we need to wait for the confirmation of this pattern, which will happen only with a confirmed breakout above the fractal resistance printed at 142.94. So there's no clear event for this one for now. Very similar for the pound versus the yen. I was expecting a violation of these highs in order to actually a violation of this daily fractal in order to increase with the probability for a move to the upside and the eventual formation of this cipher pattern at 166.30. Never happened. The price starts to fall, so there was no trade, no loss, no win here, which is also good, much better than trying to trade without a pattern and lose a trade. It's to stay out and avoid major risks. It makes part of the process. I believe it was Jesse Livermore who said, "There's a time to go. There's a time to short. There's a time to buy. There's a time to sell. And there's a time to, or there's a time to go long. There's a time to go short, and there's a time to go fishing." So sometimes you need to go fishing. Stay out, sit above your hands, and observe. Wait for the pattern to form. If the pattern forms, you react. If the pattern didn't form, move forward, then wait for the next one. You'll not force your trade just because you want to trade, you want to make money. So be prudent. Sometimes prudence it's much profitable than trading, and this was one of the moments where I was expecting the formation of a pattern that never happens, and I stay out of this one. So the same pattern may emerge for the pound versus the yen if the price starts to bounce without breaking the lows, and if the price breaks above the resistance. We have also, you can draw kind of a trend line right there. If you see a breakout above the most recent resistance, that may trigger a move to the upside. But again, we need to wait for that to happen. There is no pattern emerging at this point. We need to wait or for the violation of the daily fractal, or the violation, the fractal support, or the fractal resistance above. Euro versus the pounds. We're still trading inside this ascending channel. As we can see, we are now trading the lower, let's say, this lower part of the channel. As you can see below the regression trend, and of course based on the structure that we have, and based on the Fibonacci's the Fibonacci levels and variables that I have here at my disposal, we have a golden Fibonacci projected at 89.34. Let me go into a lower time frame. Let's go into a 2 hours time frame. We have this golden Fibonacci extension projected right there, and this is the completion point of another eventual bearish shark pattern at the golden Fibonacci. As I said multiple times, this pattern can also be pushed to the 224, and in fact there were a lot of situations where the price completes both the sequences, which means the price will react to the 161.18 extension and starts to fall, and then we'll react to the 224% Fibonacci extension later, okay? Which means there's a possibility for both levels to exert some pressure and put those patterns working on both levels, on both Fibonacci extension levels. So, but for now we are focused on the eventual shark pattern projected at 89.34, okay? So this is the shark pattern at the golden fib. So this is the golden Fibonacci extension of this last swing low, okay? If that happens, we already know what to do. The market may offer another retracement equivalent to a 50% retracement, okay? That's what the pattern will suggest, both from the golden Fibonacci and the 224% Fibonacci extension. If the price forms that shark pattern above, it will suggest a retracement to the 50% fib of all the move, okay? Since we are approaching the golden Fibonacci level right there, so we project our targets based on the shark pattern at the golden fib, and that's what we expect based on the shark pattern. Euro versus the New Zealand. Very similar situation there. 171.13, bearish shark pattern projected above, golden Fibonacci extension. Do not ignore, as I said, the possible extension to the 224% Fibonacci extension above. That will put the price trading the 78.6% Fibonacci retracement of all these swing low. Okay, pay attention to these levels. There's a nice convergence, a nice cluster there between 170.90, the 61.8% Fibonacci retracement of all this swing low, and the golden Fibonacci extension of the last swing low. Okay, this last swing low projected above, golden fib 171.13. This is where the first shark pattern will complete. Pound versus the Aussie. I was expecting a violation, or let's say at that point a violation or a breakout above this resistance. At that point, that was the 4 hours fractal resistance. I need to adjust those levels. Pound versus the yen on 4 hours time frame charts. Let me increase this. We have the weekly fractal printed right there, November 14. We have already the 4 hours fractal, converging with the daily support, which moves from these previous structural lows to the most recent ones. In fact, let me adjust this. This is a 4 hours time frame chart. Okay, daily fractal support, daily fractal resistance also move here to the previous fractal, and the most recent fractal resistance was formed at 75.67. So that's what we have for the pound versus the Aussie. I was expecting last Friday, when I shared my last video, I was expecting a violation of this fractal resistance. Never happened. I also started to see the formation of a potential double bottom, the first low and the second one, and I saw these highs, and I start to say, okay, eventually this is the next zone. The same will apply. I need to see a violation of this resistance level to consider moves to the upside. At this point, and since we are already threatening the lows again, the previous structural lows, we need to adapt. And based on what we have also a bullish crab pattern projected at the golden fib, very similar pattern to the ones that I shared before, to the other pairs, 73.91. golden Fibonacci extension of the last swing high projected below. So that being said, we have a crab pattern also projected below the previous lows and fractal support from November. So pay attention to the potential kind of a trigger to shorts. People starting to enter to the short side below this fractal, and then the potential recovery. So that's as I said multiple times, I don't trade based on huge or false expectations. I trade based on a specific target zone, so I don't expect this move to offer me a 400 points, you know. I expect the market to react accordingly. The crab pattern should offer you a trade to the 38% Fibonacci retracement level. That implies the recovery of this previous structural support. As you can see, if the pattern forms below, it will form below the fractal support, below the previous lows. But the recovery of this, let's say the recovery of the fractal, that doesn't mean the price will recover forever. So it means the price bounced, just that. to confirm a false breakout below these lows, you need to wait for the highs above these. You need to wait for new highs above the weekly fractal. So we need to see a huge move to the upside to consider a false breakout below. If the price forms this crab pattern, I will expect a reaction to the upside, but nothing assures me the price will then keep trading even lower. So the trend is lower, the trend is bearish at this point, and it will be much clearer with the violation of the fractal. So we are inside this bearish momentum. It will be much clearer with a clear violation of this fractal, but I will not be surprised to see a bounce after breaking these lows and then trying to recover again. For that reason, I have this crab pattern projected at 173.91, which may work accordingly. So if that happens, I will target a 38% fee, which makes sense, because if you break these previous lows, it needs to be retested again, and the crab pattern targets that same price zone. So pay attention to a clear violation of this structure support level for the pound versus the Aussie, because it may offer more downside momentum for the pair, but also pay attention with the formation of this crab pattern below. Moving forward, the Dixie. The Dixie I shared before. The eventual bounce from this price zone, I shared this one before with you. The 113% Fibonacci, 103.32. So this is the completion point of that pattern. I was expecting at least the 38% Fibonacci retracement from these lows. It never happened, as you can see, far away from the default target, and then it starts to break below the 113. So at this point, I have no problem to admit the Dixie may trade much lower, and I will not say this is not a target zone, because I don't have a short position to the Dixie at this point. I have just a small, I need to show you this. I believe I shared this one before. We have these, I shared this pattern before with you, suggesting the short from these highs, from 113.35. So this is the completion point of a bearish shark pattern that I shared before the completion point. And the only thing that I have here is a next Fibonacci level as a potential target, and the default, actually as a default target for the shark pattern. So we do expect the 50% Fibonacci retracement to be achieved at 101.51. So this is actually the default target for this red bearish shark pattern printed above. And this is the only thing that I have as kind of an edge. You know, there's a shark pattern, there's a few points below the DXY to achieve the default target zone, and if that level, if we achieve that level, that may offer as a nice element of support, because we know this sequence will complete the bullish 5-0 sequence. So at some point we will expect the DXY to start to bounce. And for that reason, when I saw the formation of this bullish alt-bat pattern at the 113% Fibonacci extension, as I said, nothing is granted, and we saw the price settling or kind of a moving sideways right above this Fibonacci extension, I started to see, okay, that there's potential for a major bounce. Eventually, a retest of these lows will not be a surprise. At 38% Fib, it's projected right there, so why not? And in fact, the price fails to achieve the default target. It forms a new fractal at 105.63, and it starts to fall immediately and very aggressively. So, and for that reason, as I said before, I'm now paying attention to the potential move to the downside, or more downside momentum for the DXY, and I will pay attention to the 98.38 because it will converge with this golden Fibonacci. Actually, we have a convergence between both the golden Fibs, the 161.8 extension of the last string high and the 61.8% Fibonacci retracement of the last of this move to the upside. Okay, so we have this Fibonacci level between the previous structural lows from February 2018 to the recent highs. Okay, so this is actually the 61.8% Fibonacci retracement of all these swing, which means we are already approaching the 50% Fib. We have retraced already 50% of all that move, which is quite impressive. So that being said, golden Fibonacci, pay attention to those levels on the DXY. Let's go to gold, and let's go to a daily time frame. As I said on my last video, and actually we can see this support right there. This was the session that we shared before, and actually this was, let me see the date of my last video. So last Friday it was 6th of January. Let me see. Oh, right there, exactly. Oh, this one, okay. We were trading the 113% Fibonacci extension. We saw a nice reaction during during inflation data. I believe it was NFP, non-farm payroll. I believe it was a non-farm payroll last week, and we saw live a reaction on gold, and I saw that small reaction on a daily, and I said even on the daily there's you can see there's that reaction on gold, and that reaction guides us into new higher highs on gold. So that being said, I was expecting, after the formation of this bearish pattern, I was not ignoring the potential for a move to the downside. So at that point I was projecting, I was expecting at least a 38% Fibonacci retracement back to 1769, 1770. That's what I was expecting. Never happened. Actually, as I said, during that same session, you saw the DXY closing with a new higher high, and that opens the door to form these, or for the formation of this bearish crab pattern also projected before at 1927 as a possibility. So if the price, and I remember saying, if the price fails to find resistance at this price zone, it will be forced to be pushed above. It will squeeze higher. 1927, just a few points above, we are at the golden Fibonacci retracement level. Usually, well, I don't want to say usually, because if I say usually, I need to prove to you, and we don't have time to do that. But I like to see gold reacting to the golden Fibonacci levels. That's not the first time you will see gold reacting very, very well on those golden Fibonacci levels. So that being said, I will not ignore the possibility for gold to start to pull back a little bit, or to start to a correction, because it will need to, gold needs to print a correction at some point, without completing this crab pattern projected above. At this point, of course, the pattern completion will offer me an edge, because I know what to expect after the formation of the pattern. So we know the default. We know that the default expectation allows us to create or to put some risk and to create a decent and friendly strategy to trade it. But as I said before in multiple times already, and just for this session today, nothing is granted. So for that reason, always take in consideration the risk that you want to put in your trades. If you are considering a short position on gold, this is what the pattern will suggest. It's a move to the downside equivalent to a 6.22%. And that being said, you need to, and using the example that I used before, a maximum of a 6.22% is your maximum risk reward. It's a maximum risk reward we can use. We never lose more than what we expect to win. And even though this makes no sense, because we know that usually the reaction on those harmonic patterns, it's almost immediately. So if the price pushes just a few points above the golden fib, we will expect an immediate reaction. We also know if the price starts to push even higher, it will invalidate the pattern immediately. So that being said, we can try to minimize our losses and try to create, as I said, a 1-2 risk reward approach. You trade for 6% as profits, you put 3% as risk, you adjust your position size, and you put 1% of your capital at risk, or 2% or 3%, or whatever percentage of risk you prefer to use. I play on a lower profile, so I use kind of a 1-2 percentage of my equity at risk per trade. So which means if I reply this pattern 5 times in a day, I have 5% at risk of my equity in the market. So take that into consideration. So this is my suggestion for gold. Wait for the formation of the bearish crab pattern at the golden fib 1927 that may suggest a retracement after the completion. Now, the same way we saw gold printing new higher highs, as you can see, silver failed to print new higher highs. As you can see, we're still trading below this daily fractal resistance. Let me also update these fractals for silver on a 4 hours time frame. We have the daily fractal support moved to the most recent one. This is the 4 hours. We have these lows right there. We have the 4 hours fractal here, and the daily fractal was formed right there. Move this to the bottom, the previous one to the top. Okay, as you can see, this is the range for silver. So I will admit positions to to the upside above the resistance, probably above the previous structure highs. It's much better. And I will consider potential moves to the downside if the price breaks the daily fractal. We also, as you can see, we have the most recent. Let me go to a 2 hours time frame and look at this sharp move to the downside on silver. Be careful with this. Be careful with the breakout of the support, because it may trigger a deeper move to the downside. Reasons why I'm saying this: again, look at these previous structural lows, new higher highs. A false breakout will be confirmed or validated with a violation of these supports. Okay, and that opens and in fact we can use also the daily fractal. We have the daily fractal pullback, new support, and then a retest again of the daily fractal and a rejection to break above the previous structure highs, and that opens the door for an extension to the golden Fibonacci level. Again, last swing high, false breakouts. If the price breaks below, that will confirm the false breakout above, which may offer more downside momentum. And as always, a false breakout may offer you the shark pattern later at the golden Fib or at the 224% Fibonacci extension. So that's what we have for silver. So I will expect or a violation of the support, which may trigger more downside momentum, or a breakout above the resistance, which may trigger more upside momentum in the direction of the most recent trend on silver. Okay, pay attention to a eventual breakout of the support, because we are now dealing with this 200 moving average approaching there. So basically, let's see how the price will react, and if it breaks below, because it may offer opportunities to buy again at lower prices. And by the way, to the upside, I was thinking it may happen also. The recent price action here, this last sequence, kind of a messy to work with in terms of patterns, in terms of harmonics, but I will not be surprised to see, as I said, the breakout above the highs or above the resistance should trigger more upside momentum, and eventually a crab pattern projected above, maybe, if the price respects these lows and it starts to bounce immediately without taking much time moving sideways. That will depend how much time we will stay inside this range, but if assuming a breakout of this range in a short period of time, I will not ignore the possibility to the upside. Of course, I will not ignore the possibility to form this crab pattern also projected above. Let's say, let's put the price here, 25.42 maybe. But as I said, that will depend how much time the price will remain inside this range. If the price keeps moving sideways inside this range, I will lose the harmonic here. Okay, downside below the support, golden Fib below, breakout of the resistance, golden Fib above for gold. WIT, as I said before, we have covered that already. SPS 500, golden Fibonacci as element of resistance. I shared this chart before yesterday on Twitter, and in fact, let's review the previous expectations. We saw this kind of a bearish flag pattern. I projected a bullish. We projected the bullish crab pattern at this golden Fibonacci level, but we have also I also made it clear that let's say that a false violation of this structure to the downside may trigger movements to the upside. So we have this bullish shark pattern printed at 37.72. That pattern by itself already suggests a move at least to the 50% Fibonacci retracement right there. Of course, as I said, nothing is granted, and we saw the price starting to form this kind of bearish flag pattern. Everyone was expecting this, oh, there's a flag pattern, there's more downside momentum coming. Never happened. There was a break. That's why we need to wait for the breakout of the structure. Don't try to rush, or don't try to anticipate the moves, because when we try to anticipate the moves, the market tends to trade against us. So wait for the breakout of the structure. As we can see, we saw the breakout of the structure to the upside. We saw the formation of this bearish crab pattern at the golden Fibonacci extension level, and then the price starts to fall back to the previous structure resistance. It turns this structure resistance into a support again, and offering support, and then a new bounce and new higher highs. We are threatening, we are dealing with the golden Fibonacci retracement. I shared this chart on Twitter yesterday saying, okay, this is the golden Fib. Just that. I'm not saying the price will pull back from here or not, but that's what it is. Golden Fibonacci extension now putting some pressure on equities. Let's see how the price will behave from here. I have no clear patterns here. Let me just trying to, yeah, we have no clear patterns. I was trying to understand the price action here. 127% Fibonacci extension of this last swing high. So we have this first swing, we have a retracement, a pullback to the structure in the 127% Fibonacci extension level. So I will not be surprised to the 78.6. Of course, if you consider harmonic trading or harmonic patterns, I will not be surprised to see something like a cipher pattern, maybe at 78.6, but that implies again a deeper pullback for SPX 500. That's not impossible. In fact, I need to see a clear breakout of the weekly fractal to consider more downside for equities or for SPX 500, and I'm not seeing that happening, at least on my horizon. There's no, I have no, well, there's no patterns, or there's no price action at this point which may guide me to project patterns below, unless I start to increase my time frames and well, to play to the long or long-term patterns. I can always project patterns above or below, but at this point, and based on the recent price action, I'm not expecting to see SPX 500 trading again below this weekly fractal. I assume we will print, well, I'm not saying new higher highs or new historical highs, but I admit at least a retest of the previous major resistance, the fractal printed at 43.25. So I admit at least a retest of these levels. But as I said multiple times, it's a step-by-step process. I admit once we start to approach those levels. But at this point, I'm not seeing, and that's not a sign that will not happen, but I'm not seeing the SPX 500 pushing back again below the weekly fractal. But let's say I can be wrong. I have been wrong many times. It's important not to stay wrong. You can be wrong multiple times, but not stay wrong. It's very important, which means you need to exit your losses as fast as you assume the market invalidates the pattern you were trading. SPX 500, I will not be surprised to see the formation of the cipher pattern. That pattern points to 38.15 again. Well, but that's a dramatic fall again after this recovery. It will be a dramatic move if that happens, but the market has surprised us already multiple times. It will not be the last for sure. German DAX, as I said before on my previous video, we had this bearish pattern completed at the 88.6% Fibonacci retracement. The price never provided the expected move for the DAX. It didn't find resistance neither at the 113% Fibonacci extension. We saw a very small reaction right here, very shy reaction when after the completion of this alt-bat pattern, but then finding the previous highs in fractal resistance, offering support right there, and after that the squeeze to new higher highs. Now we have this bearish, I have a bearish crab pattern projected there, 15,286. So this is the golden Fibonacci extension of the last swing low projected above, which may open the door to unfold into a kind of 5-wave structure where wave 1 equals the wave, actually if the wave 1 equals, if the wave 5 equals the wave 1, we need to find resistance below the weekly fractal, but this may unfold into a 5-wave structure to the upside, and for that reason I will pay attention to this confluence between a major Fibonacci extension, this golden Fibonacci extension level, which is an extension of this swing low. Okay, so this is an extension, this extension level, as you can see here, it's an extension between these previous structure highs and the most recent monthly fractal support, so the last swing low projected above. So this is the golden Fibonacci of this move, which tends to offer some pressure. The golden Fibonacci of the last swing high, or the golden Fibonacci or the last swing low, usually offers some pressure. The same may happen for this lower degree move. So we have the golden Fibonacci extension of this last swing low projected above at the golden Fib. We have also the 78.6% Fibonacci retracement level from the highs. Okay, if you retrace, we are already approaching the 78.6% Fibonacci retracement of all this swing low. And this completes multiple patterns. Actually, we have a bearish shark pattern at the golden Fibonacci, this gray major or higher degree pattern projected at 15,300. And we have a few points below this lower degree bearish crab pattern, also at the golden Fib, converging with this 78.6, and as I said, potential 5-wave structure to the upside. So at some point after completing a 5-wave sequence to the upside, we will expect a minimum of a 3-wave sequence to the downside, a correction made by a 3 waves structure, as always. So that being said, pay attention to the formation of these patterns for the German DAX right there. We have also the 10 years. Not sure if some of you have interest on the 10 years, but it may act as a guide for some of you. If you trade the Forex market, it may be useful for you to pay attention at the bonds and the bonds, and not only for the Forex, but in general it may be useful for some of you. And we have the 10 years now approaching, actually rejecting the previous structure in fractal resistance, the weekly fractal. I see this as a potential cup and handle formation where the handle is about to be formed. So which means I need to see the pullback for the 10 years, forming the cup and the handle, and then I need to see a clear violation of the resistance. A clear violation of this resistance may trigger a move to the upside. The same may happen for the bunds. Let me push the chart of the bund. If that happens, we may see an approach to the weekly fractal resistance also, but the bunds, there's a much interesting chart that I want to share with you, and this is a monthly, it's a monthly or weekly chart, but we can see it on a monthly chart. This is our historical chart for the bund since 1991 to the current day, obviously, and let's go to the weekly. We can see there's a trend line support actually being rejected again. So basically we saw this nice reaction of the bunds, which of course will converge with the movements on the euro in general. So we have seen the same momentum on the euro versus dollar as an example. We saw this. We saw this attempt to create some support at the bund, being followed by the bullish momentum on euro. So that being said, I will not ignore a real bounce from these lows, from this trend line support for the bund, which means, or which will imply much higher prices for euro pairs in general, specifically for the euro versus dollar, should trade much higher if the euro bund keeps trading higher too. So basically I will pay attention in terms of patterns, in terms of confirmations and price zones to pay attention to. The weekly fractal resistance, we have what we may call, as I said again multiple times, a potential false breakout below. We know that the breakout above the resistance will confirm the false breakout below. We need to wait for that to happen, and if that happens, we will see, or we may see, a move to the golden Fibonacci extension level. So it's not a big move expected, but at least it may offer a nice momentum in general for the euro to trade higher. So let's see if that will happen. So this is what I want to show you for the bund, which is kind of a rejecting for the second week in a row, rejecting these trend line support, which may offer much more bullish momentum for the euro. Now I show you. Now let's go to copper, the Nasdaq, and then I will cover Bitcoin and Ethereum, which are also. Let's go to copper first of all. Some of you may remember or not. If not, you just need to push the previous video and check this one. So this is copper. Also one of the patterns that I was expecting to see was this potential cup and handle formation. We saw the breakout of the next zone, or let's say the confirmation of the pattern and the move to the upside. So basically we saw the formation of this handle, and as you can see, the price finds support at the 50% Fibonacci, I believe. 50% Fibonacci retracement, starts to bounce, and once the price breaks above the resistance, it triggers the pattern, a move to the upside, and we have targets for that pattern at 4.28, converging with the golden 61.8% Fibonacci retracement level, $1 above, 1 cent above, for 4.28 cents, 4.29 for the golden fib. Now let's go to the Nasdaq. Let's go to the 4 hours time frame. Some of you will remember we saw the golden Fibonacci. Actually, I mentioned the golden Fibonacci as the completion of a bullish 2618 trade setup. I also mentioned that this pattern is still alive while the market still respecting the previous low. So it's a bounce before breaking, actually a bounce without breaking these lows were plausible. So I was actually expecting a reaction to the upside, but at some point I pointed also to this eventual cup and handle formation, as some of you may remember, or let's say the potential inverted cup and handle. And some of you will remember I said this was a very shy pullback, so I will not be surprised to see a violation of these lows and more downside if that happens. So what happens next is that, and we were trading these lows at that point, what happens next is a technical double bottom. So, and if you were paying attention to this pattern, you saw the breakout of this resistance triggering a retest of this structure support level here. We saw the breakout of the next zone. We saw the retest of this structure support. Then the price pulls back again, back to the next zone, and rejects the next zone. And once the price starts to move to the upside again, this is where you start to think on those that trade to the upside. If the price decides to reject the next zone again, we try to take the trade to the upside. Or you want to wait for the eventual pullback to the golden Fibonacci level, which never happens, by the way. I was expecting also that possibility. When I saw the price starting to reject this trendline resistance, or this trendline support turned into a resistance, I started to think, okay, eventually a pullback to the golden Fibonacci level, converging with the completion point, or this, let's say, this golden Fibonacci level. I saw this as a potential kind of a shark pattern right there at some point. Okay, so I saw this rejection of this trendline support, and I saw the potential move to the downside, and I started to think on the potential 2618 trade setup: double bottom, broken neck, retracement to the golden Fib, and we expect a move to the upside from the golden Fibonacci level. Never happened. We are now trading the default target zone for that technical double bottom. 50% Fibonacci retracement already hit. We have 11,483. It's the default target for this technical double bottom. Now, another pattern that can emerge, but we need to pay attention because there's other variables also. It's a bearish bat pattern, and their own variables, which means we need to pay attention to the three possible variables for the bearish bat pattern, the alt bat pattern, and the crab projected at the golden Fib. Of course, it's a step by step. If one pattern fails, you will pay attention to the other one. And of course, if you want, as I said before, if you want to try to take the advantage of the bearish bat pattern, you always need to take into consideration the 113% Fibonacci extension, projecting your position with your stops positioned above, or you wait for the crab pattern above. For now, we are paying attention for the eventual formation of this bat pattern below the previous structure highs, but again, we are already trading the default target zone for this technical double bottom. We saw the price has found some pressure right there, so it's not the first time, it will not be the last for sure, that default target for the technical double bottom or the technical double top will act as element of pressure, and that's what we saw and we are seeing at this point for the Nasdaq, the Nasdaq, the 200% Fibonacci extension acting as element of resistance at this point. Let's wait and see further. Wait for further developments on price action. We have no clear patterns for now. And we will finish with Bitcoin and Ethereum. Very violent and aggressive moves recently, as you can see. But let's not get surprised. First of all, I shared multiple times this chart saying there is a possibility for a bounce from this price zone, which doesn't mean I can't project patterns at different price zones. So just because I projected this pattern, it doesn't mean we will not see the price completing patterns below. And that's exactly what I think it may happen for the crypto market in general, unless there is a clear violation of this previous pivot zone projected position at the 25,200. So I need to see a clear move to the upside on Bitcoin to consider there will be a potential move to the upside and a potential retest of the fractal or a previous structure highs, even though for that, to take that into consideration, a move to the highs, I need to see at least a clear recovery of this pivot zone at 25,200. Until there, only search for positions to the downside, specifically on higher time frames. Search for those for the downside. If you trade, of course, if you trade a 1 hour time frame, if you are a scalper, or if you trade lower time frames, you can try to play the markets on both directions, trading the patterns, applying the strategy to trade them. As I showed you before, you trade based on a specific Fibonacci ratios and levels, so you don't have nothing to fear. If you trade for long term, higher time frames, I prefer to search for opportunities to go short, which I'm not on Bitcoin or on crypto, but I believe there is more room to the downside in general. So what we have at this point is Bitcoin and Ethereum threatening the most recent period, or let's say the most recent structure built inside this period of consolidation. So we have the previous structural lows, and then the price starts to move sideways, creating this kind of a wedge. So of course, as soon the people starts to see the breakout of this structure, they tend to consider, okay, the market is breaking above the structure, it will trade higher. I don't think this pattern is complete yet, and I think there's room for a new swing low, at least creating a third low below the previous ones, which opens also the door for more downside, because if the market breaks these lows, it will print a new lower low, and then let's say the probability for a fast and sharp drop will increase, I mean something similar to the previous swing. As we can see here, a very fast and aggressive swing low after a period of consolidation. I will not be surprised to see that happen below this structure support and below the monthly fractal. Let's say if you project a similar move to the previous one below the fractal, you can see it's not difficult for Bitcoin to produce similar moves to this one below this support or below this structure, which will help the formation of this bullish crab pattern at 3640. Of course, pure speculation, I don't know if that will happen, and I'm not even sure if the market is actually breaking above the structure. But I will not be surprised to see everyone trying to go long with the breakout of this structure and the price trading lower, just to want all those stops that will be positioned below the support. So pay attention to these movements on Bitcoin. But again, if you are searching for opportunities to go long on Bitcoin, I shared this chart multiple times, probably you are facing one of them now. Okay, If the market really confirms the breakout of this structure, this butterfly pattern needs to target the 38% Fibonacci level. As I said multiple times, that will not I will not ignore that, and that will not be a signal that the market will trade to the previous highs. It will be a significant move. It will recover the pivot zone, as I said before, so that will increase the probability for a step-by-step process, gradual process, to retest the previous fractal resistance, and eventually on a larger scale a retest of the previous highs again. And at some point in years from now we will say, okay, this is a nice big cup for Bitcoin. It may happen, I'm not saying it will not, but based on the ratios that we have, I will not be surprised with all the scenarios possible, or all the possible scenarios. One of them, a breakout below the support to the downside, golden Fibonacci level below, and of course the default expectation for the bullish butterfly pattern, a move to the upside to the 38% Fib. Since we are inside this wedge, we need to wait for a clear move or above or below. So don't take the risk just because you have a butterfly pattern. That doesn't mean the price needs to react. There's a higher probability for that to happen, but that's not granted. If it was 100%, probably we were millionaires already. It's not the case. So that being said, pay attention to these levels, pay attention to a potential breakout to the upside, give it some time, let the market settle above the pivot. I need to see this level being rejected as support again. So I need to see the price trading above these levels and remain above these levels for a long period of time in order to consider patterns to the upside, okay, above these levels, of course. I will consider moves to the upside if the price keeps trading at lower prices. But as I said before, if you are searching for opportunities to go long on Bitcoin, the completion of this bullish butterfly may offer you that trade. But again, pay attention, because, well, that's what it is. That's what it is. You put your risk there, but then the market starts to trade against you and starts to want your stops. So pay attention to that possibility. Also, adjust your position size. Play a minimum position if needed. So decrease or reduce your position size in order to reduce your risk in case of a failure. So that being said, I'm not trading Bitcoin specifically for long-term periods. So this one requires a long periods to hold these positions. So I have no interest to trade Bitcoin at this point. I have so many charts to trade, and I don't feel the need to get involved on Bitcoin actually. But I can try to push a trade, one or two trades on lower time frames, you know. So I prefer to go into lower time frames and try to make a few points there. But there's nothing at this point on lower time frames that justify an approach on those time frames for now. I'm staying focused on these daily time frame for Bitcoin, and don't ignore this trend line resistance right there. There's a lot of people starting to try to go long on Bitcoin, and the symptom remains bearish. Not that I trade based on the symptom, but take that in consideration. So we are trading kind of a descending wedge, and I will not be surprised to see a violation below this structure. For the upside, as I said, 35 or 36,000, it's the default target, the 38% Fibonacci retracement level for Bitcoin. Ethereum, it's in a very similar situation here. Let me just try to confirm that I shared this one before. It's here, Ethereum on a daily. Yeah, it's the same butterfly pattern. Let me change this to a weekly. It's the same pattern, the same butterfly pattern. We can see the 78.6 here being used as support. Then we saw the 50%, I believe, 50% Fibonacci retracement, and then the 127% Fibonacci extension, I believe, of this last swing high. Okay, so we have these butterfly pattern, 127, almost a 127, and offering this momentum or this bullish swing to the upside for Ethereum. Not enough to put the price at the default target zone. As you can see, the 38% Fibonacci retracement far away from this level. Actually, far away. We have the monthly fractal at 2030, so we have the 2407. It was a default target right there. And again, very similar to Bitcoin, everyone is paying attention to the eventual breakout of this structure, this trend line resistance. I don't think it's completed already. I think there's something missing here. I think I need a new swing low. I'm not saying it will break the lows, similar on Bitcoin. I'm not saying it will break the previous lows, but I think something is missing here. So I'm waiting to see at least a new low eventually. But as I said, for Bitcoin, the pattern is there. The bullish butterfly suggests a move to the 38% fib. I will not ignore the breakout of this structure to act as a trigger for that move. And in fact, if you decrease your time frame, you can see this. You can see this event. Let me remove this trend line. If you can look at these lows, a bounce, and new lower lows, and this may act again, as I said multiple times today. This may act again as a false breakout below. If there's a breakout above, the price will search for the golden Fibonacci. The golden Fibonacci extension is now projected at the monthly fractal previous structure highs, so which means we have a shark pattern projected at the previous highs. Okay. And we have also the 224% Fibonacci extension converging with the 38% Fibonacci, which is the default target for that bullish butterfly pattern. So for that reason, don't ignore the potential move to the upside after the breakout of this structure, because everyone is waiting for that to happen. So that's one of the possibilities is the market will respect people's expectations. The other one is the market will not feel those expectations, and big institutions will hunt those stops projected below for those who are trying the long side. So try to keep your sanity between those two sides, and try to make the best decisions when trading in general. So not only the crypto market, but when trading in general, you need to stay. You are positioned between two different people personalities, or the ones that think the market goes up and the ones that think the market goes down. So, and you need to make the judge of the situation the better that you can, and try to make the best decisions possible based on that. So at this point, I have no clear idea of what will happen. I know that we are facing that trend line resistance, as I said before, So we know that we are facing this structural resistance. We know that the trend is bearish, the momentum is bearish. So, and we also know that we need to search for opportunities to search inside a bearish market. So if you are in a bearish market, you always search for opportunities to go in that direction. If that is the case, you are in a good situation right here, in my opinion, to try the short side, both for Ethereum and for Bitcoin. Okay, that's my 2 cents. Do not ignore the breakout above, but take that in consideration, the potential moves to the downside on the crypto market in general. And that being said, that completes my weekly video today. I think I don't let anything behind, so we have everything covered that I wish to cover for today and for this week. Next week I will change things a bit here on the channel, so I will keep this weekly video every Friday to try to kind of a recap of what happened before. But stay tuned, because next week I will also start to publish smaller or shorter videos, which means short periods of time, because this one is already 1 hour and more. I will post small videos with just a couple of charts, just to keep you active in the channel and to keep you embraced with the system and with the patterns. That being said, I wish you all a beautiful weekend with the families, and get prepared for the next week ahead, for the second week of the year. I wish you all the very best, and see you there.